Hey guys, today is September the 11th of 2020, and I want to go over the pound using a couple of techniques, using the Fourier Analysis technique in combination with other stuff, and show you where we at. Because what the pound is at right now is very interesting time in regards to Elliott wave count, price action. So let's dive into it. First off, I want to let you know that I use a program to let me know Elliott wave count. And for some reason, ever since we were somewhere around here, it's been saying that this is wave 3. And now it's showing that it's a wave 5. So I don't know, maybe something in the coding and the algorithm, the way they programmed it. But it's interesting. I honestly think this is a wave 1, 2, 3, because typically the wave 3, it's like a bigger wave. And I can't see this wave being, a wave 4 to 5. It's like, it doesn't make sense. And I'm not, an Elliott wave, hardcore master, but I know a little bit of it that it does kind of make sense to me. So even though you see here 5, I think this is a 3 and that this is a wave 4. Now, if the program is smarter than me and it says like, no, you're wrong, this is going to be a wave 5, we're going down, then what I want to see price action do is that we're going to go do a 1, A, B, and then C, go down. If that happens and we take out this support right here, then that's gonna confirm that this is wave 5 and that we're doing ABC. But if price action continues going higher, this is a wave 3, 4 going into 5. Now, getting into the technical, this line right here is an inverted seasonality. It's forecasting that the pound could go as low as September the 24th, but originally it's going higher. So my Model 1 seasonality also shows that we were supposed to be going high into anywhere between the 18th to the 22nd and make a high up there and then tumble down or go lower. But price action decided to stop on September 1st and just kind of push lower. And it'll be interesting to see what's going to happen. But with some Fourier analysis, it's going to hopefully give us some guiding points here. These right here are time clusters. And it says right here there could be a possible swing low, and then it kind of fizzles out. Stokes, I like that it's starting to turn positive, like here, and that happened there, and over here, very oversold. So it's in the oversold territory, and it's starting to get positive. So that is a good sign saying that, the sellers are exhausted and that maybe it's time for the bulls to come back and see what we could do. Let's see. Oscillators, you can see that there's a divergence. We made a high here, and then we made a lower. So the divergence was showing right here, and you can see that price action kept going higher here and right here. Divergence, another indicator that we were getting close to a top. MACD is still negative, so that's going to take a while for it to get positive. Cycles, I'm using the 57 dominant cycle. So you can see it was right here, peaked, but prices kept going up, came down, and then it peaked right here, and then it picked the top right here. Somewhere between the 57 dominant cycle, 22, there's a couple I use. I switch them back and forth just to see where price action is lining up. And right now, cycle is indicating that there could be a possible swing low on the 18th, so that remains to be seen. Anything else? Other thing here, the Elliott trigger will only work and confirm if we have a wave 4. If we have a wave 4, that means that this little wiggly line will get above this line right here, and that will confirm that we have a wave 4 going into a wave 5. Now into timing solutions, using the RSI, you can see that we're very oversold. You guys know that already, very oversold. We're oversold over here. Now, once we establish that, that means that maybe it's a good time to start thinking about long positions. So with the Fourier analysis, what I went ahead and did some possible turning points into the future. And what the Fourier analysis was telling me is that today is a possible swing low, remains to be seen. The day's not, over yet. Also, the 14th, which is a Monday coming up. Monday coming up. Also, the 17th is a Thursday. The 21st is a Monday. And the 23rd is a Wednesday. So these are possible turning points. So how can we use this to our advantage? Well, if prices go up here, this is the weekend. So if it's going to open up here and we go up, you got to watch for the 17th. If it's going to be an ABC pattern and go down, or it could stall here and continue going high. It'll just bypass this, but it's just showing us that there could be a possibility of a turning point here. If it continues going up, then this is a day you want to keep an eye on, the 21st and the 23rd. Depending on what price action is doing, these dates could get volatile and could be a possible turning point. If it's going sideways and it pushes lower, then this could be a possible turning point, a swing low. If it's pushing lower and lower, then this could be a possible turning point of a swing low. And if it continues pushing lower, this could be a possible turning point. So it all depends what price action is doing and where it's at when we get close to these lines. So either way, I'm guessing that maybe, since it's so oversold, maybe the bulls could step it up next week and we buy it here, go long maybe here and watch out for Thursday, or kind of consolidate, kind of go sideways, build a position, and then maybe Thursday pop and maybe continue going higher. But that all remains to be seen. It all depends on what price action is going to do. And if we believe this is the wave 4, or we're going to do the ABC and push down, that all depends on that. Next thing I want to do is add the Bradley model. The Bradley model is indicating there could be a possible turning point on the 21st. So that's confirming the 21st on the Fourier. So that is what I call a cluster, indicating that there's something building up here that we don't know, because we don't know where price action is going. If it's going to go up, then this kind of confirms more than, you know what, there's a lot of this is a hot zone, what I call it, a hot zone. So it all depends. And if it's selling off, ABC sell off, then or just straight up, more downside than, because of Brex exit or whatever, then this is going to be a hot zone. So we're building up a game plan using these indicators. Then lastly, even before we add that, let's look at seasonality and see what seasonality tells us. Seasonality tells us that price action normally starts topping out somewhere between the 16th, the 23rd. This is an annual, also with a decimal, a decade, 10 years. So it says that it kind of bottoms out here, which is the opposite. So all of these show that it kind of tops out here. With my Model 1 also kind of tops out here this week. The 18, the 21st, around there. And this one shows it. So it could bottom out, and it lines up with the 14th, which is Monday. And then it goes up, but it goes up all the way to October the 5th. So that all remains to be seen. I'm just working on next week and then the following week. The forecast of two, with two clusters, with one cluster and one hit here. So let's take that out using seasonality, and let's add annual cycle. Same thing. It lines up here on the 23rd. So it says it should go higher. So if this is a wave 4, like I said, we should trend higher and make a wave 5 somewhere in this ballpark, and then maybe do an ABC correction down. And lastly, use the, I'll take this out, the Bradley model. And this is cycle analysis. And what I did was I went and got, using the 10, so it kind of narrows it in more closer, more fractal. And I used the 56, the 29, and then the 17, just to kind of narrow down what price action could do in the short term, because I'm kind of forecasting within 2 weeks time frame. So I don't want to look at the bigger cycles. I want to look at the smaller cycles. And what we do is we could do a couple of things. We could start out with the one overtone and then use a composite of the waves. and just kind of give me a combination of these three waves. These are the more important ones that I see. There's some that show on the 22, 23, 25, but for some reason, this was not really picking it up. It picks up to 29, 17, and the 56. So it's showing that, price action will top out here. Price action is going to bottom out here, and then it's going to top out on the 21st. So remember what I told you about the 21st, that there's a lot of stuff going on the 21st. The Bradley model says a possible turning point. Fourier is saying it's a possible turning point. Cycles are pointing up into the 21st and then kind of going, sideways. So what can we dissect out of this? Well, price action could go higher, consolidate maybe here and just go up and make a high, or, we just got to wait to see. But if you want to follow the cycles and the dates and the turning points, I could tell you right off the bat, this is a hot zone right here using that. Now, the next thing you could do is take the overtone and switch it to 6. And it kind of gives you, more of a fractal, smaller, different swing points. I kind of go back and forth between 1 and 6 just to see what it does. And it says that it's a little more earlier, you see? Just move this out of the way. So it says that Monday is going to open up and it's going to do a dead cat bounce to the 15 and come down to the 19th, go up the 24th, and then go 27th and just kind of chop around. You can see that in this, it was kind of chopping around. And then this came down and price action followed. So it remains to be seen, but it'll be interesting to see what the open is going to be for next week. And on top of that, you just can't use this, by itself. You want to use this with whatever your system is in regards to, trigger longs or trigger shorts. So my game plan is I'm not getting in it now unless, something happens, some, volume or whatever, and it gets a big pop into the close. Maybe I'll think about it, but I want to wait for everyone to, assess the week and see like, wow, look what happened. Look at the COT report, see where all the big players are lining up. And then come Monday, and now that we have all these dates and we have all these parameters helping us, then Monday comes up, and I want to see if price action is going bullish, then I'm going to go long and then kind of, tying up some stuff when we get to Thursday and see what happens. And also looking at the economic calendar, see if there's any, red flag news that could come out and maybe change things for the dollar or the pound. And then the 21st, I'm really going to be eyeing it because there's a lot of stuff building up there. And then take it from there and see if we going to work on a wave 5 or ABC correction. That's it for me. I'm going to sign out. Hopefully you like this video. I'll keep you posted on my analysis on the pound. Let's see how these 2 weeks pan out. And then we'll revisit and then look at, our old video and then I'll make a new one. And then we'll see what worked, what didn't work, what was good, what was bad, the good, the bad, and the ugly. Have a great weekend, and I'll see you again. The Gann Theory.